Hello, my name is Frank White. I'm an IT analyst, but secretly, I fight crime at night. In my spare time, I trade the Forex market. What if I told you there's a simple pattern on the charts? One that repeats itself every single week and gives you a 75 to 80% win rate. Welcome to World Trader's Paradise. I'm going to show you exactly how I trade the Forex market using one powerful setup. Let's get into it. Before we dive into the strategy, let me quickly explain what Forex actually is, because understanding the market makes you a better trader. Forex stands for foreign exchange. It is the largest financial market in the world, with over $7 trillion traded every single day. When you trade Forex, you are simply buying one currency and selling another at the same time. For example, when you trade euro-dollar, you are trading the euro against the US dollar. When you trade dollar-yen, you are trading the US dollar against the Japanese yen. These are the two pairs I trade exclusively, and there is a very good reason for that, which I will explain shortly. The Forex market is open 24 hours a day, 5 days a week. It never sleeps, and because of that, opportunity exists every single day for those who know what to look for. Now you might be wondering, Frank, why only 2 pairs? There are hundreds of currency pairs to trade. Why limit yourself? Here is the truth that most traders learn the hard way. Trading too many pairs at once leads to confusion, missed signals, and emotional decisions. When you focus on just 2 pairs, you learn their personality. You understand how they move. You recognize the key levels instantly. Euro-dollar is the most traded pair in the world. It is clean, liquid, and predictable. Dollar-yen is my second pair. Strong trending behavior and very responsive to support and resistance levels. Together, these 2 pairs give me everything I need. Consistent setups, clear signals, and a 75 to 80% win rate when I follow my rules. But what is an engulfing candle? A candlestick tells you the story of a battle between buyers and sellers. A bullish engulfing candle happens when a green candle completely swallows the previous red candle. It means buyers just took full control. The opposite, a bearish engulfing, is when sellers take over. But here's the key. Location is everything. Let me explain what I mean by location. An engulfing candle that forms in the middle of nowhere on the chart means very little. But an engulfing candle that forms at a key support or resistance level, that is a completely different story. That is where the real power is. That is where the 75 to 80% win rate comes from. Let's quickly touch on support and resistance. Support is a price level where buyers have stepped in at a specific level to push upwards, a floor. Resistance is a ceiling where sellers pushed price back down. These levels don't just disappear. The market remembers them. When price returns to a key level, that's where we pay attention. That's where our setup becomes powerful. How do I find these levels? I look at the H1 chart, that is the 1 hour time frame. I look for areas where price has bounced at least 2 or 3 times before. The more times price has respected a level, the stronger that level is. These are the zones where my strategy comes alive. On euro-dollar right now, you can see a clear resistance zone around 1.1638 to 1.165. Price has tested this level multiple times. Every time it gets there, sellers push it back down. That is exactly the kind of level I am looking for. Here's the full strategy. Step 1. Identify a strong support or resistance level on the H1 chart. Step 2. Wait for price to reach that level. Don't chase it. Let the market come to you. Step 3. Look for a confirmed engulfing candle at that level. The candle must fully close. No anticipating. Step 4. Enter on the next candle open. Place your stop loss just below the engulfing candle. Set your take profit at minimum 2 to 1 risk reward. That combination is what gives us our edge. Let me repeat that because it is important. You do not enter while the candle is forming. You wait for it to fully close. Patience is what separates profitable traders from losing traders. The setup either confirms or it does not. There is no guessing. Your stop loss goes just below the engulfing candle for a long trade, or just above it for a short trade. Your take profit is at least double your risk. That means even if you only win half your trades, you still make money. But with a 75 to 80% win rate, the results speak for themselves. Let me walk you through a real example on euro-dollar. Price rallied up to this resistance level. You can see it has been tested twice before. A strong bearish, engulfing candle forms right at that level. We enter short on the next candle open. Stop goes above the engulfing candle. Target is double our risk. Price drops, and we hit our target. Clean, simple, repeatable. Now look at the dollar-yen chart. Same strategy, different pair. Price comes down to this support zone around 158.74. A bullish engulfing candle forms right at the level. We enter long, stop below the candle. Target double our risk, price bounces, target hit. Two pairs, same strategy, same rules, same results. This is not luck. This is a repeatable edge. And now you know how to find it. That's the World Traders Paradise Engulfing strategy. One pattern, two pairs. A 75 to 80% win rate when you properly and consistently follow these simple but effective trading rules. If this helped you, like this video and subscribe, because every week I'm dropping new strategies, live examples, and trading education to help you grow as a trader. See you in the next one, and welcome to paradise. Don't forget, the future's past is our looking glass.